So, the first shot has rung out in the Great American Reshoring War. This is an image of the battles of Lexington and Concord on April 19, 1775, and we're living through a similar moment today. April 2nd, 2025, dubbed Liberation Day by President Trump, marked the end of an era, not just the era of free trade, but the era of America funding the global economy at the expense of its own. And what we're witnessing now isn't a pivot, and it's not a trade war, it's a structural reset of global capital flows, engineered not by central bankers, this time by the executive branch. And Trump's reciprocal tariff regime was not about punishing bad actors or closing the trade deficit in and of itself overnight. It was about something far bigger, and that's laying the groundwork for a different global economy. And that's one where the U.S. stops subsidizing global consumption and starts investing in its own productive base. So tariffs were slapped on 185 countries, even some that aren't inhabited by human life. And the goal wasn't just leverage, it was a total repricing of production, capital, and labor. Strategic manufacturing is returning, boardrooms are recalculating, the dollar is softening, and this time it's not happening by accident. This is fiscal disruption as stealth yield curve control. At least that's what they're attempting to do. The White House isn't trying to prevent the fallout from all of this, they're trying to push through it because for the first time in decades, sovereignty and individual prosperity, not GDP, is the metric by which the nation's health is going to be judged. For decades, the U.S. has been treated like an open-air economic zone, a strip mall with an airport. The world got surpluses, jobs, and capital inflows. Meanwhile, we got cheap goods and structural unemployment. And that arrangement no longer makes sense, and it's no longer fair. Since 2001, America has lost 3.82 million jobs to the China trade deficit. We offshored labor, and we imported fragility. We replaced manufacturing with government work, paid for by debt, not productivity. And we now rely on foreign nations for everything from semiconductors to antibiotics, and the public has had enough. Liberation Day wasn't something small, it was a declaration that American sovereignty and prosperity isn't for sale. And the White House isn't flinching as equities drops, right? Wall Street is bleeding. Their job isn't to preserve index levels, it's to rebuild the industrial base. As Secretary Bessent put it, the equity market sell-off is a Mag 7 problem, not a MAGA problem. Nike was punished by a 46% tariff that caused its labor cost arbitrage to be totally wiped out. It only recovered after Vietnam agreed to drop tariffs on U.S. goods, and Nike rebounded. And GM is building new capacity in Indiana. So political risk now lives inside cost of goods sold models, and companies without a major domestic footprint are being repriced unless their governments go to Washington. So what we're living through right now is kind of the messy middle of Trump's strategy. The 10-year yield initially dropped off a cliff after tariffs were announced from 4.13% to under 4%, I believe 3.91. But by April 7th, it snapped back violently, spiking 16 bips in one session, and that synthetic bid that the United States tried to create for its debt totally faltered, and foreign buyers are pushing back, and the administration, despite all of this, isn't backing off, even though 10s are now at 4.37. Scott Bessent said, "My job is to be the bond salesman for the United States," in a Tucker Carlson interview. So the objective here is clear. It's to reroute capital from abroad into treasuries, extend duration, and normalize the U.S. debt profile. The era of subsidizing the global economy is over. And through this turbulence, one asset is shining, and that's Bitcoin. It's up 9.46% since the tariffs were announced, outperforming every major macro asset. The S&P 500 and NASDAQ are both down 6.7%, and gold is up a comparatively small 6.41%. So this isn't just a post-tariff anomaly. Bitcoin is also outperforming year to date and since Election Day. And for the first time in a crisis, it's rising as risk assets bleed. Back in March 2020, from February to March during the COVID crash, Bitcoin fell much harder than stocks. But this time it's up while they're down. And that's because Bitcoin is very uniquely positioned to straddle two worlds. It still benefits when risk assets pump, but at $2 trillion, it now trades like gold when markets fall apart. Its historical beta hasn't disappeared, but something has clearly changed. Bitcoin is beginning to behave like the monetary constant its properties have always allowed it to be. Bitcoin is digital gold, making it the chief beneficiary of the changing global economic order, but its historical correlations mean it will also rip if and when markets flip back to risk on. And it's now tracking global M2 once again almost perfectly with its 70-day lag. You could see this right here. Gold, of course, still moves first because it's deeply embedded in central bank balance sheets and it's already fully monetized. And while Bitcoin doesn't move as fast as gold does, it's catching up and it's catching up fast. The monetization process is accelerating, and that's why since September of 2023, this relationship between Bitcoin and global M2 have been so close to one another. Spot ETFs are helping, but largely it's the global macro conditions doing the heavy lifting. Take a look at this chart right here. Take a look at just how closely gold is tracking global M2, both in time and distance. That's what's in store for Bitcoin as it monetizes from $2 trillion to gold parity and beyond. You can see right here, gold being a $23-25 trillion asset at this stage, much larger than it was earlier last year. It's now tracking global M2 not only to a T, but also with basically zero time delay. So another thing to consider here is that Bitcoin has diverged from the US dollar. Since the sweeping tariff regime was announced, the dollar has softened and Bitcoin exploded rather than falling, climbing from $75,000 to over $93,000 in weeks. This clearly isn't a bubble, it's an asset repricing. And even Wall Street is starting to see it. Across all Bloomberg terminals across the world yesterday was that chart that I first showed you of Bitcoin outperforming everything, every major global macro asset class since the tariffs occurred. So when Scott Bessent said the tariff war was unsustainable yesterday and the S&P popped 2.5%, Bitcoin still surged harder. And that's because the market gets it. Bitcoin benefits from inflation, expansion, and uncertainty. It is positioned, as its monetary properties have always allowed it to be the least correlated asset in history. Something that you want to own in good times, and you especially want to own in bad times. And this positioning isn't lost on policymakers either. Bo Hines, a senior White House official, is floating the idea of selling gold reserves to buy Bitcoin, which is a portfolio rotation that would be considered budget neutral under the strategic Bitcoin reserve order signed last month. This isn't a trade. It's a regime shift, and Bitcoin isn't high beta anymore. It's being positioned as pristine, sovereign-grade collateral. So this may not be the start of a structural decoupling, right? But it's absolutely a window into how Bitcoin will ultimately trade. Price is truth, after all, and during times of crisis, assets, just like people, show you who they really are. Bitcoin is the single most asymmetric trade in financial markets today, if not of all time. Its monetary properties allow it to be the least correlated asset in history, and its continued monetization is a fulfillment of this destiny. The fourth turning is here, and the Bretton Woods conference of our generation is underway. And this time, the reserve asset won't be imposed, it will emerge. Bitcoin is the least correlated asset in the world. Its positive correlation with risk was always temporary, and now it's conditional. And as the world shifts, Bitcoin is shifting too, into the monetary constant it was built to become. It was never just a hedge, and it's now becoming the reference point for the system that comes next. That's all for today. Thank you so much for watching. If you enjoyed this video, make sure to like and reshare so that everyone can see it too. And of course, if you enjoyed, follow for more and check out Theya, spelled Theya. It's the world's best Bitcoin custody solution. You can find it at app.theya.us, or you could scan the QR code right there. That's all for today's video. Thank you so much for watching. I'll talk to you soon.